Thank you for joining us today at the West Virginia State Treasurer's Office, Department of Unclaimed Property, for our presentation. Here is our main presenter, Sarah Withrow.
Hi, I am Sarah Withrow. I'm the Receipts Manager at the West Virginia State Treasurer's Office. And we're going to start off our presentation by going over some of the essentials of reporting and compliance. This is going to cover where you're going to find a lot of types of your unclaimed property, where to locate them, what we're going to do with them, and start off with some of the highlights of how to report and the beginning of the reporting stages. So we're going to go ahead and get started. Basically, what is unclaimed property? There's a lot of different types of unclaimed property. If you've ever looked at our unclaimed property type reporting sheet, you're going to see over 100 and some types listed there. Some of our most common types, and basically every business has, you're going to have your accounts payable checks, your credit balances, expense checks, etc. The true definition of an unclaimed property, there's two types. There's intangible and tangible. For most of our holders, they hold intangible property, and that is your property which the owner hasn't taken any interest or action in within a certain period of time. That certain period of time is what is considered to be that dormancy period. If you're from a financial institution, you could possibly hold tangible property, and tangible property from that perspective would be what is contained in your safe deposit boxes. We also get questions every once in a while. We'll have people call in and they will hold, hospitals have called in and they have held things that are left over from people that have passed away or deceased. Same thing with nursing homes, maybe jewelry that was left there, perfume, money, wallets, things like that. We do not accept that type of tangible property here. That property, we do not have a legal per se opinion in our state code of what you can do with that. Some of our recommendations that we can give an opinion on but not a legal ruling on, and other entities have done with this, have been to auction it off or sell for fundraising purposes or whatever to support other departments within the facility or etc. And other questions we've got is like real property. If someone leaves a vehicle, a trailer or something on property that your entity would own, questions for that would need to be referred to the auditor's office, because the auditor's office could tell you what they do with that property. We do not handle property like that. So for our office, we're just looking at your intangible and your tangible properties from the perspective of what we're going to speak about today and from the safe deposit boxes. Some other types of unclaimed property, and I'm not going to read these out to you, each and every one of them. Again, most every business is going to have your basic payroll checks, refund checks, vendor checks, accounts payable checks, etc. If you're a business and you do not have unclaimed property, it's really rare. Almost every business should have some sort of unclaimed property somewhere along the line, unless the checks continually are reissued. Someone is staying on top of this consistently. There is going to be some type of unclaimed property that is constantly out there within your books somewhere. For specific entities that are listed, if we have any magistrate courts or clerk's offices, there are specific property types that these entities will definitely have. Bonds and restitutions, nursing homes are definitely going to have some funds held in fiduciary capacities. And your municipalities and your PSDs, you would definitely be reporting some utility deposits and refunds. Those are things you're going to see common when you're reporting your unclaimed property on an annual basis. In order to start getting your report ready to file, you need to start identifying the liability. And there are 5 different things that I would suggest to do to start your location and the identification of these liabilities. First, scouring your chart of accounts is very important. You want to look at all your accounts and where the funds could be hidden. This could be across the board, not just your liability accounts, but also in your income accounts. Looking at the organizational chart of your business is very important. You need to know your entity structure. There's different departments where your liabilities can be found, not just in, a lot of people think, well, maybe just in AP or in payroll, but you also need to look and see if your entity has a tax department. They can be holding checks for taxes that needed to be paid, that the tax department maybe didn't cash, business license fees, etc. Your HR department not just holding payroll checks, but they can also be holding checks that were held back for healthcare plan benefits, etc. And of course, travel and reimbursement checks, and etc. Looking at your departmental work documents for each department, whether the entity has one bank account or several, you're going to want to go over all of the bank statements and the recons, and of course the departmental recons. Your aging reports are going to be very important, your accounts receivable aging reports, and then your general and your sub-ledger accounts for your UCP balances. And when you dig down deeper into those departmental reports, you're going to look at your disbursemental accounts because those feed directly into those reports and those recons. And then last but not least, a questionnaire is a good thing that when it comes around to the time where you want to start getting ready to do your due diligence, something that I suggest is that you start maybe doing a calendar item each year in August, with our due diligence period being having to send the letters out between 60, no less than 60, but no more than 120 days before the reporting deadline, is maybe starting in July or August, doing a note on your calendar to reach out to these different departments and making that a type of communication vehicle, sending an email out and asking them, to start going through, their recons and their work documents and their bank statements, etc., and seeing what could possibly be hanging out there and what items that they could get cleared up before they would turn that over to you to be able to find out what can be reported, what could be cleared up as a mistake, etc. Once that you get all of that completed, you're going to want to start putting your data together. So you're going to start listing all of the stale date checks, what actually needs to be reported, and you're going to look and see what has to be reported according to the dormancy and exemption rules. We're going to hit more on the dormancy later and the dormancy periods when we go over the property type code tables. So when you consolidate this list and go over the analysis of it, that's going to make a big difference on what's going to be reported or not. Once that determination is made, that's when you start your due diligence of sending out the letters to the owner's last name, address. You're defining what's reportable, and then you're going to have to track those responses. And then at that point, also it gives you another chance to, pull back any errors, see if there's any type of accounting errors that need fixed, make those journal entries, etc., and do the reconciliations and adjustments if there's anything that needs to be passed on to the applicable departments that those mistakes have came from. The next slide just shows you a flow chart that I have done of what happens when something becomes stale date. Again, it's pretty much self-explanatory, but on your stale date of liabilities, if something becomes dormant, you automatically go straight to doing the due diligence. Then it goes to the payee, and the report is filed. If it's non-dormant, it stays in the liability account, and of course, if it is exempt, it's removed from the liability account because it's a reissue. And our next slide, I did an example of something that most businesses are going to have for everything, is how a payroll check becomes dormant. And this is just done from an accounting perspective on what accounts are hit once each step is taken, from implementation to issued to when it becomes stale to when it should be identified as unclaimed property, and once it's remitted. Now you'll see a star in the middle between the third stage and the fourth stage, and that star represents when the due diligence process should take place. When you get ready to report, as I had mentioned before, there are 6 things that you need to start looking at. First will be, of course, where to report your property. West Virginia follows the 1995 Act. The 1995 Act is the latest act of the Unclaimed Property Act. There is one pending right now, 2017 Act, that is before NAST and a lot of the other committees. Nothing has been done with it. Nothing has been finalized on it, but it is setting a precedence today in the unclaimed property world, where a lot of changes could be taking place very soon. But as of right now, we are following the 1995 Act. There were three major acts in the past. There was the 1966, 1981, and the 1995. Basically, the biggest difference in these were the rules of jurisdiction, meaning where that property has to be reported, and the difference in dormancy periods on each type of property. For the state of West Virginia, the 1995 Act basically states that all property has to be reported where the owner's last known address is. Meaning, if the owner last lived in West Virginia, the property is reported here. If they last lived in California, you want to report the property there. This is very, very important. You're going to hear a lot about this when it comes to Megan's presentation at the end on a lot of the common reporting mistakes, because you expose yourself to a lot of liability if you do not follow this jurisdiction rule. And states are getting more and more stricter in the penalties and the assessments that they are issuing if the properties are not reported to the right states. For our reporting dates in West Virginia, we have two separate reporting dates. Almost all of our reporting, with the exception of life insurance companies, is due on November the 1st. That means the report has to be postmarked and submitted by November the 1st. If this falls on a weekend, we do follow the same protocol as the IRS does, then it's due that following workday. If you are a life insurance company, then your report would be due on May 1st. There is also a different cutoff time period. For reporting that is due on November 1st, you're going to report any property that is dated for dormancies up to June 30th of that year applicable to the year of the dormancy. Whereas with life insurance, your cutoff for that May 1st filing would be December 31st up to the applicable time period of the dormancy on that. Phil says if we have an insurance check that we do not accept that's from Pennsylvania, but the patient came from West Virginia, would we send the refund check to West Virginia? So, Phil, are you saying that Pennsylvania won't accept the check? Oh, okay, the insurance company in Pennsylvania won't accept the check. Yes, you would report it here to West Virginia because the patient accepted care here. And then we would be returning that check to them on a reciprocal agreement. That's odd that they wouldn't accept it from the hospital. But sometimes that's how they do. For due diligence requirements, West Virginia requires due diligence to be done again within 60 days before the filing period, but no more than 120 days. This is to give the holder and the owner enough time to make contact with each other and to give a better response rate. And for the property type and dormancy periods and stuff, we have separate slides that are going to follow. And on the relationship type codes, we're going to get into that as we go through more slides, and you're going to see a couple inserts that'll help you. As I explained earlier, this is just the true definition of the jurisdiction from the 1995 Act, which was also referred to as the Texas versus New Jersey Act. And a lot of questions come up on the second part of this about the state being entitled to keep the property if the owner's last known address is in that state. People say, well, the state keeps the property, they don't return it. Not necessarily. We return it to the owner. It just means that the state keeps the property within the state. It's held in perpetuity. It doesn't mean that we keep it here and it's not returned at all. And on the last part, if the address doesn't have there's no record of any address for something that you report, then the property needs to be recorded to the state of incorporation, the state that your business was incorporated in. When I had spoke of reciprocals early, when I had mentioned that to Phil, there's a lot of risks when it comes to reciprocals. We do participate in reciprocal agreements, but not all states do. Some people will call and request a list of those. We do not have a formal list of reciprocals, and reason being, it changes year to year. And again, we do not want to really put that information out there because we don't recommend it. It's not something that we want to recommend because of the liability and the risk that it puts you as a holder out to report other states' property to us. Number one, it doesn't release you from any type of liability, meaning the liability not only with the state of West Virginia, but the liability, for example, if you have a check that needs to go to Ohio or Virginia, it doesn't release you from the liability to their state just because you're reporting it here. Reporting it here and following our rules is totally different than reporting it to Ohio or Virginia and following their rules. Every state is different. That's one of the biggest complaints in the unclaimed property world. There is no uniformity. It's hard. It is a hard task to do if you are preparing unclaimed property reports and you have numerous states. You will see a lot of differences not only in reporting times and property type codes, but the way that states want the reports prepared, the way that they want them mailed in, the way that they prefer their due diligence letters, even the way that some states want a preliminary report sent in before an actual report is sent in. And some states will even do their own due diligence after you have done due diligence. So they all have little intricacies, and that exposure puts you at a risk for more penalties and interest. So a $50 check can end up costing you hundreds of dollars if you don't follow their rules. So we try not to accept out-of-state checks. Our rule by thumb that we use is if the properties are more than 10% of your report, then we will kick it back and ask you to report the other properties to the correct states. So if you have 100 properties and you report 12 out-of-state properties here, we're going to ask you to take those 12 properties off your report and send them to the correct state. And also, from a claimant's perspective, it takes the claimant longer to get that reciprocal. Although we do participate in the agreements with the other states, meaning we do once a year process a claim. Our claims manager does. She gathers up all these properties through our system, and they are burned to CDs sent to these other states. That is usually done in the spring. So if we receive your report in the fall, it's processed in the fall. You have held these funds for whatever the applicable dormancy period is, whether it's 3 years, 5 years, 1 year. It's sent to the other state in April or May. Then those funds have sat here while they were processed. They've sat here for 6 months. You've held them for 1, 3, 5 years, and then they are sent to the other state. I cannot tell you how long the other state's going to hold them before that report is processed and advertised. So the claimant, if they call looking for their funds and we tell them they're sent to another state, or they call you and you say you sent them to West Virginia, and then we have to tell them they were sent on to another state, it just prolongs the time that they can claim their funds. So from a claimant perspective, it's prolonging the whole line of being able to claim any type of property. Again, our filing dates that I had spoke of earlier, November 1st for pretty much everyone except our life insurance companies. And I did list the filing period dates. We run on the fiscal year from 7/1 to 6/30. Insurance is May 1st with a normal calendar year. When we spoke of due diligence, that is the last-ditch effort to reach out to the owner to make contact with them. We require a written letter to go out to the owner. It just has to be sent first-class mail, just regular postage stamp. It is mandated by state law, and you have your 2 codes listed there. We think that not only is due diligence a good customer relations, but it's a smart business practice. You're reaching out to your customer. They're hearing it from you rather than from reading it in the newspaper, ads, or seeing it on the website, or going out to missingmoney.com, which is a national website where people can locate their unclaimed property funds. But they're hearing it from you, and they're reestablishing the communication with you as a customer. They would much rather know that you're contacting them and you're trying to give their money back than having to contact us, file a claim on it, and then the average claim processing time takes 6 to 8 weeks for us to get the money back to them. By the time we request proof of identity, whether it's something for a smaller claim and it just has to be, verification of a license and then passed on to the auditor's office for the check to be cut, that's still 5 to 6 week wait So they would rather hear that from you. If you haven't saw that customer in a while, you're reestablishing that communication and you're increasing that goodwill between you and the customer. It's also can be used as a fraud prevention tool, and it prevents your material misstatements on your financial statements because it's decreasing the bottom line. And of course, there are penalties for performing due diligence, not just in West Virginia, but in other states too. The rules for due diligence, you have to send the written notice, as I mentioned before, and I had mentioned a timeline before. The one good thing is you don't have to do it unless the property is over $50, and if you know that the address isn't any good. So if you have an address that just says Route 1, you don't have a box number, you know that's not legitimate, you do not have to send that out. What you do need to do is just keep that in your file with your paperwork for your reporting for your retention backup. West Virginia does have a 10-year retention period, and that's pretty much standard across the board with most states is that 10-year retention period. So you want to keep all of that together, whether outside agency comes in to audit you or whether you have an internal audit firm that comes in, you want to be able to show them why you didn't do the due diligence with them. When it comes to reaching out to customers and contacting them and what proves that a property is abandoned, with the electronic age coming up, we get a lot of questions on whether email is considered contact. As of right now, no, it's not. That is going to be one of the big questions coming up in the 2017 Act is email and text messages. As of right now, again, it's a no. Written communication, yes. Phone contact, yes, it is, as long as it is tracked. You need to have notes on it. And electronic contact, there are certain types of electronic contact. If you have a reoccurring automatic electronic withdrawal, payment, or deposit via ACH, if you're a financial institution, and it's on that account, and there is a way to track it, like an IVR system, yes, you can, but there has to be a tracking possibility. It could be considered contact. If someone calls in and they are putting in a PIN number to verify a balance on an account, but it shows up and it looks like, it's coming up dormant on your end and it looks like it's going to be reportable, then that's not going to work. If they have a recurring car payment coming out of another account, but not the account in question of the one that you want to report, that's not considered contact. If you send out statements or notices and they're not returned by the post office, that's not considered contact either. You need to have your statements and stuff to be returned RPO, which is that little yellow sticker that comes on the front of your envelopes that usually say no longer at this address or new address. And of course, with new address, you would just readdress it and start over the time period for your due diligence period. If you have a purchase or a service charge that's applied to the account, that's not considered contact. Or if someone makes a payment on another account, that's also not considered contact. So those are a few of the little quirks that aren't considered, and they're again listed on the next slide. So if you'd like a summary of those. And there are like a few other ones that apply specifically to financial institutions. So if someone would like a list specifically to those, I could send those out to someone if they want to get a hold of me or send some specific questions, especially when it comes to like IRAs and CDs, etc. When we get in reports, the better the data is, the more chance of reuniting the property to the owner. That means the happier the owner is going to be with you as an entity. So the better the information is also is the less that you're probably going to hear from us. It increases the likelihood of returning that property and it expedites the claims process. So if someone calls in to claim their property, the more information that's there, the less they're going to have to provide to claim their property back. Even if it comes down to a middle initial, a lot of times that can make a big difference. When you go to report things, you have to have required information. You have to have a full name and address if known. If you know that, you have to have something in those fields. If you don't, then we ask that you fill those fields with the word unknown. Something has to be in those blanks in every software out there and our eHolder application. Or when you try to save that property, it's going to give you a little red asterisk it. And Abigail is going to go over that with you on her presentation. That will show you these fields and how the application will react and come up with the error notices for you. If you have a social security number or a tax ID number, if you are holding a property for a business, that will help immensely. A date of birth or a date of death, those are especially important if you're reporting any type of insurance property. They help greatly. If you have a name, that's pretty common. You have to have a last transaction date, which is also referred to a date of last activity, whether it be the date of the check, if you have to revert back to that, or whether you're using the date that the due diligence letter was returned. Two new fields that we added, it's been about 2 years ago, are email if available and a driver's license number if you would have those. This little table that popped up, and you probably can't see it very well, so there's a hyperlink down there at the bottom, but it is on our website. It's in our holder instruction booklet, but your best bet to be able to get to it, to bring it up separately rather than fishing through the holder instruction booklet online, would be to go to the holder under unclaimed property business holders, and under business forms, this property type code sheet is listed separately, and you can pull it up and it's dual sided. So you will see, you can print it out by itself. It's color coded. If you have a color printer, it makes it nice to be able to have each industry segregated on it. And we've tried our best to keep everything in alpha order, except we cannot put the miscellaneous in order. We kind of had to break it up. So I think it's on the actually back of the sheet rather than with the M's. But it starts off with financial institutions and then goes all the way down to utilities. Choices on there, again, you have financial institutions, you have your courts, you have insurance, your securities, your stocks, you have your IRAs, your miscellaneous checks, which that includes like all your accounts payable, your payments for goods and services, your vendor checks, etc. Everything on this sheet is your key to when you go to report your property type. On your left-hand side is an alphanumeric code. It's always going to be 4 digits, 2 letters, 2 numbers. In the middle is your description, and then on the right side is your dormancy period. What you do is you will take each piece of property and you will determine what class that property falls under. So for example, if you are a nursing home and you're looking for what code to use, you would look under your TR accounts. It would actually be on the second page, and you're going to find a TR03, and it's entitled Funds Held in Fiduciary Capacity. And then there's a dormancy period there. Now, if we have any nursing homes that are on this call, it's actually on the second page, third section up, if that helps you. It's color-coded blue, and it's under your income and escrow accounts, your investment and escrow accounts. For nursing homes specifically, in March of 2012, the legislature passed a section in the West Virginia Code, 165C18, that if no estate is open, that funds have to be turned over 30 days within a patient's death. So if a patient resides in that nursing home and they pass, those funds need to be reported to our office. You would report those funds using that TR03 code, and you would not use that applicable dormancy code that's listed on the right side. That is one of the rarities of not using the dormancy. Also, if you are a state agency, when you flip this property type code sheet over, you will see an asterisk at the bottom that states state agencies are reportable within 1 year. Everything defaults to 1 year, just like your payroll. 90% of the property types on here are 5 years. I'm not sure why, it just ended up that way. One of the big changes that the new act is looking at is bumping the dormancy period is up to 3 years. The reason behind that is to obviously increase revenue for the states. That's the truth behind it. People hate to hear that, but that is the reasoning behind it. One thing on dormancy periods, we get questions on how they would be reported. If you have a 1-year dormancy period, whether it's for a state agency or for a payroll, if you have a check that's dated June 28th, 2016, it would go on your 2017 report. But if that check was dated July 6th of 2017, you will hold that check for another year and report that on your 2018 report using type MS01, which is listed as wages and payroll, and again with a 1-year dormancy code. For any 5-year property type code, like your AP, your MS08s, credit balances, your refunds, your miscellaneous checks, your vendor checks, etc. Your 5 years are for this year's reporting in 2017. Those are going to be any checks with a date applicable up until June 30th of 2012. So you're working backwards for that 5 years. But just remember that cutoff is June 30th. A question we'll get a lot of times, do you accept early reporting? There are a few circumstances that we will accept early reporting, but those are few and far between. They basically come down to whether you're ceasing business or the business has filed bankruptcy or merged or been acquired by another business. Other than that, no, it's really not going to happen. The next slide just goes over dormancy periods again, the importance of them. You really want to pick the most applicable dormancy period that you can. If you have a lot of different dormancy periods that you're looking at, or different property type codes that you're looking at, you might have a lot of different dormancy type periods. But again, most of them are the 5 years. If you are dealing with a lot of different states, it's very important to probably start building a matrix from these different states because, again, there is no uniformity. And a change in that dormancy period can change your whole report. It will affect how your whole report is due and what is actually due and payable on what year and when you need to get it reported. One question we also get a lot of times is dormancy charges. Can we write off different charges, whether it's dormancy charges based on inactivity from financial institutions? Yes, they are pretty much the only entity that can write off any type of fee. And the 3 reasons you will see on the next slide, you have to have a contract, they can't be canceled, and it has to be a conscionable amount. These are different than escheatment charges. Holders are not permitted by law to enforce anything against the state of contractual condition that is not enforced against the owner. You cannot take any type of charge. If someone left your place of business, they took a computer with them, they took a uniform with them, you cannot take that out of their paycheck. You cannot take that out of any type of funds that they would still owe you, maybe like a reimbursement check or something. You cannot take any type of fee out of anything that's reportable as unclaimed property. Only financial institutions have the right to do this. But I will caution you, if you do report to other states, there are charges that you are allowed. Some states will allow you credits for mailing costs, for preparation costs, for advertising costs even. You want to check with that when it comes to looking at your different rules for reporting with different states, because you might be able to catch a break on some of the expenses that you go to when you're preparing your reports. Now, relationship type codes, that is where you get into who actually owns this property. What are your choices on your relationship type codes? This is who actually owns the check. I mean, who is the owner of this property, of this check that is written? Is it made out to one person? Is it, was the check made out to a husband and wife? Was it made out to, somebody wrecks their car? So is it made out to State Farm and Ed's Body Shop, and Mr. and Mrs. Joe Smith. I mean, those things are very important factors when it comes to reporting the property correctly, because all of those owners are going to have a play in who can claim the funds. How you report that property is how that property is going to be paid out. And if there is a mistake in how that property is reported and it's paid out according to how it was reported and it was wrong, then we have to come back to you as a holder to collect the funds and recover that so the property can be paid out right. So it's really important that you make the right choice. Again, Megan and Abigail are going to just get a little more into detail on those. There's a link at the bottom that will take you directly to the different types of relationship type codes. And you can also find a copy of that sheet where the property type code table is listed also. It's just a one page. There's probably about 20 different codes listed on there. We do offer extensions. So if you are a first time reporter, or if you have just became started to report, or if you report it every year and you just don't have time to get everything done, you're new to it, or whatever the reason may be, you might want to think about applying for an extension if you can't get your report in on time. They ensure compliance. You establish a good faith that you're going to do your report, and you're reducing your audit risk by knowing that your report's going to be filed. We ask that you get these in 30 days before the November due date. Every year it seems like we'll get probably 100 the week before they'll due, before reporting is due. So we always try to ask that we get them in as soon as possible. There's a copy of the extension form on the next slide that you can see. And again, that's on our business form page if you want to see what it actually looks like. But there are choices on there where you can ask for a 30-day extension, 60-day, 90-day, or other. You choose one, you choose a reason. Reasons are listed are personnel, change in personnel, change in system, mergers, and then there's an other. If you want to put on there other, just didn't have time to do it, that's fine. It's honest, it's true. We realize, everybody's doing 2 or 3 jobs in today's world. Things just get out of control. Everybody gets overwhelmed. We're going to grant you that extension. You're reaching out to us. You're telling us, you're going to do it. And if you need 90 days and then need to do an extension on top of an extension, we're obviously probably going to grant you that extension. The only thing that we won't do, we will not grant concurrent extensions. After you have filed an extension for 3 years in a row, we're going to start thinking, well, they've had a new system last year, and then they've got a new system this year and another system this year. We really don't think they had a new extension or a new system for the 4th year in a row, so we're probably not going to do that. We think they might just have a problem with not wanting to get it done in time. So we ask that if you are going to file an extension, we'll do everything to accommodate you and help you get that done and get it approved, but we do ask that you just please comply. If you don't have it turned in by the due date, you'll probably get an email from me telling you, we haven't received it. Just let me know if you want to extend it and stuff, and we'll get you out a new due date, and you'll have that within an email, usually within about 24 hours. And again, we just ask that you try to get that in within 30 days. The sooner the better. And here on the next slide is the reasons that I had mentioned before. And probably a lot of people on this call do not have reporting agents or transfer agents. Those are people that report stock for a company. And reporting agents are if your entity is so large that you hire someone to come in and do the reporting for you, which is normally not what we see a lot in West Virginia. But the other reasons are listed on here. And again, there is an other box. So like I said, if you just want to put didn't have time to do it, we appreciate the honesty, and we will work with you however possible. And there's a copy of the extension. Once you fill it out, just sign it. And at the bottom, there's an email address. You can scan it. If you don't have ability to scan it and email it back, you can fax it in. If you want to mail it in, that's fine too. Just however you want to get it here, we'll enter it in the system, and as soon as I get it entered in the system, I'll send you an email with the new due date. As far as negative reports, they are not required by the state of West Virginia. The only time they would be required is if you did file an extension. So if you filed an extension and you got to the point to where your 30, 60, 90 days were up or whatever, and you realized, well, I've taken care of everything. I found everybody. I've located all my owners. I don't need to even do a report. You really need to go online, and for our submission format through that, it has to be done through eHolder. So you'll need to go online and either establish an eHolder account or log into your pre-existing eHolder account and do a negative report. It takes probably 2 minutes. You sign in, you go through the affidavit saying that you agree with the terms, which took the place of having the notarized form that we used to require, and you click negative report rather than enter report or upload report, and then it brings up a confirmation. So that is the only way we can get the extensions washed out of our program. If not, then they continually come up on a report each month when we run our monthly reports. So we have to have that negative report filed to get that extension washed out. And that would be the only time they are required. If you're a consistent reporter and you're reporting property every year, from an auditing perspective, I would file a negative report even if you don't have something to report 1 year. And the reason behind that is because it leaves an audit trail showing that you didn't just miss a year, rather than if you have internal auditors come in, or if you have JCO come in, or your state agency auditors come in and they say, well, you filed reports 2000 through 2014, but you didn't file 15, then you came back and filed 16, where's this missing report? At least you have a negative in there to support the fact that you did review your records, you did, do what you needed to and make that effort, and you went ahead and filed something, so it doesn't look like there's a missing piece to that puzzle. So I do encourage it from an auditing perspective, but it is not required. Now, other states, they do require negative reports. So if you're filing out of state, you do want to check their regulations. If you have made a mistake on a report and you need to get your funds back, we do return those funds back through what's called a holder reimbursement. And there's your actual definition of a holder reimbursement. Some areas you could have previously paid the item out and not realized it until after the report has been filed. Maybe it wasn't recorded right in your AP system or your accounting system. You could have reported an error, maybe under the wrong owner name, the wrong amount. You could have reported it to West Virginia when it should have went to Wisconsin or Virginia, or it could have been reported as pre-abandoned. Or maybe you paid it out after the report was filed. A lot of times you will have a customer come in, they'll bring in that due diligence letter that's been sitting on their counter for 2 months, because every time they walk out the door, they forget to pick it up and take it with them and bring it in and say, hey, I have this refund. So they come in and you cut them a check, because you would rather do that than have them come to us. In order to get your funds back, we offer a holder reimbursement. It's a simple form that you fill out. It is, again, under our business forms on our website. It's PDF fillable. That's why it looks blue on this page. You just type in the report that it was reported on the right-hand side. And then on the left-hand side is a holder information. That is you. That is for the reporting year, what the property type code was, the amount, etc. Send it in, have it notarized. The person who filed the report and who your confirmation came back to needs to be the person that signs this form, so it can be paid out through claims. If not, then once I receive it, I'm going to have to call you and have the person either sign it or have you send me a copy, an ID copy, verification of your ID, to prove that you work there and that you're a part of that entity. But point being, we make these a top priority. So whether it's a small amount or a large amount, These are put in front of the claims that are paid out to individuals. So you will be able, as a holder, to receive your funds back quicker. We try to get these processed within 3 to 4 weeks. As soon as they come in, we try to get them across the hall to our claims department and get your money back to you. Sometimes they can be rather large, and we understand, it's almost like double dipping pretty much. So we try to get that back to you, with a lot of businesses, being small and not having the excess funds. So those are our top priority. Just fill them out. Again, you can just scan it and email it back to me, or you can fax it into us and we'll get it right over. So you have that form to be able to get your claim form to be able to get your money back, and to fulfill your customers' wishes and to make them happy. We're going to go ahead and get started. Abigail's going to go over eHolder and show you how that works and all the ins and outs of entering your report online.
Thank you very much, Sarah. We now welcome Abigail Campbell to talk about electronic reporting, filing your report online.
Good morning. I hope everyone is enjoying the presentation this morning. I'm going to talk to you today about electronic reporting and how to file your report online for your unclaimed property report each year. Just to kind of recap what Sarah went over, what kind of property are you going to be reporting? It's going to be your account balances, payroll, outstanding checks, vendor checks, basically any kind of check that you have that's outstanding, or account that's outstanding that has had no activity for the dormancy period. And then what information is required before you ever start going and creating your report. You need to make sure that you have all the information that's here on the screen in a Excel format or in some format, because you are required to have all of this information. And that is your property type code, so you have to know what type of property it is, the relationship code, which is the relationship of the person to the money, the property description, which you can put just anything you'd like there. If you have an account number, you can put an account number. If you're a nursing home, you can just put, resident trust account. Something has to be in that field. The owner name and address. So like Sarah said, if you don't have an address, you can put unknown there, but something does have to be in those fields. The date of last activity. In the case of a check, that would be the check date, the date the check was issued. And in case of an account, it would be the last date that the account was accessed. And then, of course, you need to have a dollar amount, and then any additional information that you do have, such as the person's social security number, date of birth, email address, driver's license. All those fields are going to be optional, but if you do have the information, we do ask that you give it to us so that we can make it easier for the property to be claimed. And then also, before you report, you must do your due diligence for all amounts over $50, and it's not required if the address is known to be a bad address. Some people ask, well, can they just send the report in on paper? They only have 5 or 6 properties. Can they just send it in on a paper? The answer to that is no. They're no longer accepted. And there was a law passed all the way back in 2008. It says that electronic reporting is required. If you absolutely cannot file electronically, your business has no computers, which I don't believe, since everybody in here is watching a webinar, but say you're having some form of problem or it would be a hardship, you can contact us, let us know, and we may be able to work something out with you. And electronic reporting does protect everyone. That way it ensures the data going into our system is accurate and is correct. There is actually going to be several reporting options that you do have. There are third-party softwares out there that will create files for you. And you can either, once those softwares are used to create the file, you can either burn that to a CD and mail it in, or you can upload that file to our website. And then we also have the option where you can enter your data and file for free directly on our website, which is shown there, the apps wvsto.com/eholder, and I will show you how to get to that from our website. With the CD option, there is going to be multiple softwares out there that you can use to create the CD. Most are you do have to pay for. The only one at this point that is free is the HRS Pro online web version, and I am going to show you quickly what that does look like. There's actually a pay version of that and a free version. The UP Exchange software, only a pay version of that exists, and then Tracker, only a pay version of that exists, and then there are several others as well. If you are a large corporation reporting to multiple states, you may want to think about getting one of these software systems, as you can take advantage of being able to upload spreadsheets into them instead of hand keying information. You can also create a report for states separately in there. But it is only really an advantage if you have many properties and are filing to multiple states. The HRS Pro web version, in order to go to that, it is located at the hrspro.unclaimedproperty.com. And once you go there, you're going to see this where it is free. You can sign up with the free link there, and to sign up, the free version is limited to one user per entity. It does use your email address as your login. Now, once you create your account, which is a super simple process, you just pick what you want your username and password to be. You can add your holder. Now, when we talk about the word holder, we're talking about your business as the holder of these funds, okay? So any word that says holder, we're talking about your business or your company. So you would add the information there that is required, the holder name, your tax ID number, those kind of things. A contact person, an address. Then once you actually get into the system, you can actually create your report either manually or through the upload with an Excel template, as I was speaking of before. Now, to create a manual report, you just click the button there that says Create Manual Report. You set up the shell, it asks you the reporting year and all of those kind of things. When you go to add your properties, it's very user friendly in that when you add the cash, you click on Add Cash. It will give you a pop-up box prompt to enter in the data. Same with owner. You go to enter the owner, it will pop up a box prompt for you to put it in, so it's very difficult for you to leave any field blank with the pop-up boxes that come and prompt you. The only date that we do require here that does not pop up for you to prompt to enter something is the date of last activity, and you do need to make sure that you do enter something in that field that is on the front of the property there. Now, if you want to use the Excel template, if you have many properties and you have your information in an Excel spreadsheet, Once you go, you click on the Download Excel Template button in the top right-hand corner, and it's going to give you an Excel that looks like this that has multiple fields in it, and you just need to make sure that you fill out each of those fields with the correct data for each property, the amount, the first name, last name. The headings there for each field are pretty self-explanatory to what needs to be put in there, and you can just copy and paste that from another Excel document into this one and then upload it. Now, once you save that template to your desktop and then import it on this page on the HRS Pro software, it is going to come up, show something like this, and then up in the top right hand, you're going to have the option to download the NAPA file. Now that quote, NAUPA file, the NAPA file as we call it, is what is required that you send in as your report. So when you click that, it's going to save a file on your computer that looks something like this. It's going to and that is what you can either go to our website and upload or burn on a disk and mail in to us. And that pretty much takes care of the software. Now, the free version of the software doesn't really have any support attached to it. I know just a very basic amount, what I have showed you here. If you do have questions about that, you can contact me. I will be glad to play with the system. I do have an account with it and see if I can answer that question for you if you're tempted to use that as an option. Now, the second option, just entering the data directly on our website, is the fastest. It is a lot simpler, and it is good if you don't have hundreds or thousands of properties to report to us. Now, when you go to the State Treasurer's Office website, you are going, which is wvtreasury.com, you are going to see this screen that says the treasurer's name and then different tabs there that with the different departments of the treasurer's office. You want to click on the one that says Unclaimed Property, and then over to the left, the blue link that says Business Holders. Now, when you go to that link, you're going to see multiple things there, either on the right-hand side, or these things can appear at the bottom depending on the size of your computer monitor. There's going to be some basic information, things we talked about today in the presentation, when the filing dates are, that kind of thing, the links to the holder claim form for the holder reimbursements and property type codes are all going to be there in those blue links on the right hand side of the page. So you can kind of check that out after we're done here. Now there is a button there that says Report Online. So when you are going to go and create your report, that's what you want to look for. Once you click that, it is going to bring up the eHolder website that our IT here in-house developed for you to create your report. Now it's going to ask you for a username and password. If you have never reported before and do not have one, you can click on the red letters up to the top. When you click on that, it is going to bring up your account request screen. There's going to be the contact name, which is just your name, and then the holder name, which again is going to be your business name. You just choose your own username and password. There is a drop down for holder type. If you're a court, you want to put court. If you're a bank, you want to put bank. And make sure that you do select the correct one there, because if you select bank, it's not going to give you even an option to select some of the court property type codes. And same way with court, if you select court, some of the bank property type codes may not show for you. So you want to make sure and select the correct holder type there. Now the company information down below, where it asks for your sales and your number of employees and all of those type of things, that is optional auditing information. If you don't know that information, if you don't have that information, or if you just don't want to provide it, you can leave those fields blank and just go ahead and go down to the bottom and hit the request button. Once somebody reviews it, which usually takes about 5 minutes, you will receive an email back that says your account has been activated. It does sometimes go to spam, so if you don't ever get that email, you can go ahead and try your login information and it may just go ahead and let you in. Now we like to have one account per business, because the system saves your work and it saves past reports. So if an auditor does come in and say, I want to see the report that was filed in 2012 and you just started 6 months ago, well, if you had access to that person that worked their's account in 2012, you can log in and show them everything that was there. So we do ask that if you leave your position to transfer your login information to the next incoming person, and if you request an account and one already exists for your entity, you may get an email from us saying, you already have an account for your company, here's the information, or does this person still work there? And we'll get it all straightened out. But after you log into the system, you want to click on over to the left, the button that says Report Property. Once you click on that, it's going to come up and basically just asks you, have you done your due diligence? You just want to say, I accept. And then you can start entering the shell of your report. It's going to ask for your tax ID number again, and it's going to ask for the report year. So if you're doing your report in 2017, you put 2017. If you're doing it in 2018, you put 2018. Pretty simple there. The property info, you're going to have three options there. You're either going to report your property online by entering it one at a time. You're going to upload your NAPA file that you created in one of the softwares like HRS Pro that we looked at already, or it's a negative report, so there's no property to report. Now, negative reports are not required, but if you want to do one, it does take about 15 seconds if you have an account to just log in here, select that button, and hit the submit. So that's up to you, and it is encouraged if you have filed in the past to do a negative. And like I said, it takes about 15 to 30 seconds to do one. Now, we're going to show you how to enter the report online. So when you click on that button, it's going to come up and ask you, is this intangible or safe deposit box contents? So everyone but banks, their property is going to be intangible. And banks, if anyone on this call is from a bank and you have safe deposit box contents, you will have to file 2 separate reports. One for the cash properties in your accounts and one for your safe deposit box contents, and you'll have 2 separate confirmations. So everyone with the cash would want to hit intangible. And then it is going to come up with a screen where you enter your properties. So each one of your properties is going to be entered separately. So at the top, you're going to have your property type code, which is a drop down. It's going to give you the options there. You know, is it a paycheck and is it a refund? And all those are going to be explained. Your property description that we talked about that was required, your full name, um, and then there is an option there that says property owner if business. So you need to fill out one or the other. If your property owner is Walmart, you would put that in property owner if business field. If it is John Smith, you're going to put that in the first and last name fields. So one or the other of those sections need to be filled out. The address also required, like I said, if you don't know it, it would be unknown. The relationship type, that also is a drop down with all your different options there. If it's just a one owner, it's going to be primary owner or payee. If it is a multiple owner property, a bank account with two owners on it, we need to know if that is an and property, if it is an or property, so that we can pay it out accordingly. And this is where that you give that designation. And then the date of last activity. Now make sure that you do put a 4-digit year in that date of last activity field. If you do not, if you just put 17 for 2017, it won't save your property and it won't tell you what you're doing wrong. So you need to make sure, like for the year 2017, that you do type out 2017 for it to save. Now the amount of each property goes in the box over to the left that says amount before deductions, and you will put that there and go down to the bottom once you've entered all that information and click Save This Property. Now once you click Save This Property, you could get this box here that pops up that says that the property is pre-abandoned. Now, if you are a public entity, a state agency, or a nursing home that has the 30-day requirement, you may get this saying that you are turning the property over early. If you get this, go ahead and click on where it says I agree with the terms. It will take you back to the property, and then select Save This Property a second time, and it will save your property. You will know that your property has saved correctly when the box that says current sum of property details increases. Okay, so if you save a property for $100, that amount should increase by $100. So if you're not seeing that, if that isn't increasing, your properties aren't saving correctly and there's a problem. So you need to check to make sure if there are any red asterisks next to any of your fields, meaning that you're missing required data, and make sure that your date of last activities do have a 4-digit year in there. After you've entered all of your properties in, you're going to have the option down at the bottom to say I am finished. Once you select that, it's going to take you to a payment screen with the contact name, your holder, address, all of those things in there. And you're going to have 3 payment options: ACH debit, ACH credit, and a paper check. For the debit, that is where we are going to debit your account. So you will want to enter your institution name, routing, and account numbers for debit down at the bottom, and we will debit that out of your account. For ACH credit, that is where you need to contact your bank. We will provide you in your confirmation email with the state's routing and account number, and you can have your bank transfer us the funds into that routing and account number. And then the paper check, which is still the most popular option, is there, and you could just mail a check in. If you do mail a check, all that we ask that you put with the check is your confirmation number, either a copy of the email that you received with your confirmation number on it, or you can write it on a post-it or in the memo note of the check or something like that. If you absolutely cannot provide that information, the check's coming from a corporate office or somewhere before it is mailed directly and doesn't come to you, that's fine. It just does help us get it to your file faster. So don't worry about it if you absolutely cannot put it on there. So after you select your payment method, it's going to say click to process report. After you click this, you cannot for any reason go back and make any changes. If you've selected ACH credit instead of debit, you can't go back and select a different payment type. You can't change an owner name. Once it's submitted, it is submitted for good. So once you go ahead and submit, it's going to come up on the screen. It's going to give you your confirmation number, which is going to be a UP web and a number. And it will also send you an email that looks like this from the e-holder support that says your confirmation number. It will have the address on where to mail the check. If you did select the ACH credit, that routing and account number will be on this email, and you can keep it for your records. Now, I had mentioned before that it does save the reports that you did in the past. So if an auditor would come in and say, I need to see that report, the unclaimed property you reported in the year 2015, you can come in here. Over to the left is going to be a link that says review previous reports. When you click that, there is going to be blue links there to every report that you have ever filed. When you click that date and amount there, it is going to come up and show you on the screen kind of the cover page of what was filed, the contact person of who filed it, and then at the top there's a little floppy disk icon. If you select that, you can download the report in Excel, Word, or PDF formats. And then so you can give it to the auditor, you can put it in your records after you've filed your report or anything like that. And then I also talked about how we do only like to have one contact per company and one account per company. If we say, John Smith had an account at your company that was set up 2 years ago and he left and you take over his account, in order to change his contact information to yours, you want to select over to the left the words that say update contact information, and you will see basically the account request screen again, where you can change the contact name to yours, your email. Now, in order to get the changes to save, you do need to enter your password twice. So make sure that you enter your password and then confirm your password. If you don't enter it twice, it will not save your changes. So make sure that you do that in order to update the contact for an existing account. And then why do you need to file electronically? It's easier. Not a lot of paper, it's accepted business practice, and it is mandated by law. Are there any questions about filing your report online? Okay, it doesn't look like there are any questions. So thank you for listening to the presentation on how to file your report.
Thank you, Abigail. Next up, we have Megan Trout coming up to discuss with us some common reporting errors.
Hello, my name's Megan Trout. I'm going to go over very briefly some common reporting errors that we see. This shouldn't take too long at all. We do have a problem with reporting errors, especially because if you make an error, a claim may be paid to the wrong person, and that liability would fall back on you if that were to happen. So you want to try and report as accurately as possible, give us as much information as possible, because you don't want that kind of liability to fall back on you if you did submit something incorrectly. It also can be very timely to process your filing. If you make errors, we will have to come back and contact you, ask for clarification. It just takes a lot of extra time, which in turn takes a lot of extra time if you have a customer that is trying to get their money back and we can't process your filing because there are issues. So we try to get that taken care of as quickly as possible. Some of the most common things we see are that the report and remittance do not balance. You want to make sure that your check and your report are the same amount. And you also want to make sure that these checks are mailed within 7 days. We do give a little bit of leeway with that, but really it needs to be mailed within 7 days so that we can get those processed as quickly as possible. And you also want to make sure that those checks are made payable to the West Virginia State Treasurer's Office. We commonly see checks come in that are made to the Tax Department, Auditor's Office, different agencies, and we are unable to cash those payments. If you select the incorrect payment type on the e-holder screen, there is no way to go back and fix that. This is particularly an issue if you are attempting to pay with a debit and you accidentally select an ACH credit, which is the automatic default on our screen. You have to select it from the drop down to change it from ACH credit. If you meant to select a debit and you've selected the wrong payment type, there is no way to fix that. The only way that you would be able to do a debit at that point would be to go completely re-enter your report. So most people will opt for a paper check option if that does happen. And if you do an ACH debit, you need to make sure that the routing and account number is correct. If the information is incorrect, we have no way to change that information once we've received it. So again, you would have to go in and redo your entire report. That is obviously a massive burden for you, and you don't want to ever have to do that. So be very careful when you input that information. For courts, if you have a refund or a restitution, you should be using a CT09 property type code and a CT13 for bonds that are deposited with the court. Do not use a CT99 code for anything that is over $50. That is only for your aggregate properties. And do not use the miscellaneous court deposit code for your refunds and your bonds, because those do have their own property type code. Nursing homes, most of what you will be turning over should be under a TR03. These are for all of the personal funds that are managed by the facility, which means that you're holding on to all of the accounting for this person, and when they pass on, you want to use a TR03 code. If you have just general refunds, those would be MS11s. And again, don't use the TR99 or the MS99 codes if you have any amounts that are over $50. Hospitals, MS11, again, that's a general refunds due code. And CK13 should only be used for vendor checks. Do not use those for your refunds due. And again, don't use the aggregate codes for amounts over 50. I know I've said that several times, but that is an issue, and we will come back to you and ask for a more specific code if the amount is larger than $50. The relationship codes, we see this very often. This is the relationship of the owner to the check, not your relationship with the owner. So we want to know if this person was the payee of the check, if it's an estate and the person has passed away, estate of would be the correct relationship type. If you have more than one person, please do not use payee, primary owner, or sole owner. We need to know specifically what the relationship between the two owners would be. So for an and, this is a check that would only be made payable to both owners, and an or, we would pay that out to the first person that had a valid claim. So if you incorrectly selected or and you had two people, we would pay that to the first person who came forward, and if the second person came forward and it was supposed to be an and, you would actually be liable for the amount that the second owner should have received. Any custodial accounts must list who the intended owner of the check was. So if you have someone who's passed away and you only give us the executor of the estate, we need to know whose estate it would be. So we need to know who actually was due the funds in the first place. If you have multiple relationship codes, and this is really for larger businesses, so you've got a lot of executor and estate properties, or Uniform Gift to Minors Act and custodian accounts. We really recommend that you use a reporting software because our online system only has the capability to recognize one relationship code per property. Please make sure that you put the names in the correct format. I know this is pretty basic stuff. Put the last name where it says last name, first name where it says first name. If you have businesses, please list those in the property owner if business field. If you do that, please do not list any information in the last name, first name field. And if you do not list the holder name in the property owner of business field. That actually happens sometimes, and when you do that, it will supersede all data in the last name and first name field, and it will only show us the holder name. So we'll come back to you and ask for that information. Please make sure to fill in zip codes and do not abbreviate the cities. Last activity, that is required for any check over $50. So please make sure you send that. If you don't send that, we will come back to you. That is a required field. And any information that you do have, even though they are optional, we do ask that you send it. So if you don't have a social security number, it's not a huge deal. But if you do have it, we ask that you send it. That makes it easier for us to pay out claims to these people. If the more information we have, the easier it is to reunite these people with their money. Obviously, I know Sarah and Abigail both went over this. You have to do due diligence. That is required. So you want to make sure that that is done. And you need to report in a timely manner. If you are a county or local government, that's 1 year for you. If you're a nursing facility, it is state law that you turn that over within 30 days after the date of death. 5 years for refunds and accounts payable, and 1 year for wages, payroll, and salary. Just make sure you're turning your property over in time. Some other stuff we see is that the confirmation number is not sent with the payment, or that you've sent the incorrect confirmation number. If it's at all possible, please send that. It makes it much easier for us to actually match your payment up with your report, especially if you send multiple checks for one report, or you have multiple reports on one check. Please send that confirmation number. It makes it a lot easier for us. Each property being input as a separate report. We are no longer accepting reports that are split out and you're sending them as one property and then creating a whole separate report for another property. Those are no longer being accepted. All properties should be put on one report. If you need to mail separate checks, that is completely acceptable, but please consolidate your report, make one report for all your properties, and turn them over at one time. Do not report reports with no West Virginia owners. We will not accept those. It needs to be 10% or less of your report. We will send those back to you if you don't have any West Virginia owners, or if it is 10% or more. Please do not use the property type code CK04 or CK15. CK15, that actually will require a lost instrument bond. So I don't think there would be, unless you're with a bank, there should be no reason to use a CK15, and a CK04 would be an internal code that we use on our part. That's for treasurer's checks, so there should be no need for you to use those. I think that's about it for me. Does anybody have any questions? All right. Well, thank you very much.
Thank you, Megan, and thank you, Abigail, and also thank you to Sarah, and thank you to all the people who spent time with us this morning. If you do have any questions, you can call our 800 number at 1-800-642-8687.